Hey everybody, it's Shannon from alphatrends.net. Today's Friday, the 13th of December, 2019. I hope you had a good week of trading. The only reason not to have had a good week of trading is you might have been short, which is just a dumb thing to do because we're in a bull market that is up at all-time highs. So let's take a look at the charts here. The S&P 500, again, still at an all-time high. It broke past a short-term level of resistance here and continued to move higher. So what we'll be looking for in the early parts of next week is for this prior little band of resistance at about 315 to hold as the first support area. That's the 315 level. We can also see that the month-to-date volume-weighted average price, which for some reason isn't showing up here, so I'll just reapply that, is what we stayed above when we did see a little bit of pullback. But more importantly, again, we still have that rising 5-day moving average, and when the 5-day moving average is rising, it's innocent until proven guilty. The Nasdaq, same story here, held above that rising 5-day moving average and continued up to a new all-time high for the Nasdaq. There's no reason to think it's not going to hold. We'll want to see the first more important level, probably right around 204.5 to 205. The Russell 2000 lagged a little bit, but it did get up to that 165 level that we've been talking about for a while, which was our first upside area that we thought might provide some resistance. I still think that probably first quarter of next year we see new all-time highs in the Russell 2000. It's maybe gotten a little bit ahead of itself, but it's still healthy, and 162 to 162.5 is our more important near-term level of potential support. As long as we remain above that, we're going to continue to give the benefit of the doubt to the buyers there. And again, it was the semiconductors that really led the way here with their breakout. We had that shakeout, that failed move over here, which got a lot of people bearish, but it was still with a rising 50-day moving average. And then we broke this little area that we have been trading in and did so with quite a large move out of that range. So semiconductors will be looking for that prior band of resistance to hold as support if it does pull back. And again, we're innocent till proven guilty. Try to fight this thing over and over again, but the buyers are the ones making money in these markets. The Biotechs made a new high here for the year today, but pulled back just a little bit. Still closing with a gain, but approaching the highs from last year. And that might be an area where we see this market slow down a little bit, kind of similar to what I've been talking about in the financials. Now, in the financials, if we go back to this high, you can see we're still above it, but it's the high from actually 2008 that, I'm sorry, 2007 that is still not quite met. And when the market, you know, that high is, I think, 93 cents. A lot of times what we see is a market will go up to and through that prior high and then begin to consolidate as people start calling it a breakout. And, you know, breakout you can call it, but look at where it's come from. It's come from 26.5 here just at the beginning of October. But it's not a reason to sell or sell short. The buyers are clearly in control, still holding above the rising 5-day moving average. So many stocks are in great uptrends, and there's still opportunities available. Stocks like AAXN, this is the old taser. It's not quite ready yet, but you can see it's had a nice consolidation, pull back to that rising 20-day moving average, trades 645,000 shares per day. Here's our weekly chart. It broke some important resistance. The issue with this stock is it's still stuck below the volume-weighted average price off that peak. I'll be watching that one next week. It's kind of similar to SGMS. SGMS is a stock that I passed on this week because, you know, it pulled back, but I was looking at the potential that it would encounter supply at the volume-weighted average price from the peak, and that's exactly where it found that. So you can't, you know, if you're going to buy these things, be aware of the key levels and who's in control from any area at any point in time. That's what the anchored volume-weighted average price allows you to do. Another stock to keep an eye on is CTXS. It had a nice run. It's pulled back, a healthy consolidation here. Still above the rising 50-day moving average. On a 30-minute time frame, that's our month-to-date volume-weighted average price. And I think if it can get back above that next week, it might make a run for the volume-weighted average price from the peak. And then perhaps you see something, you know, like this materialize, and then it can continue to move higher. These, you know, stocks move in steps, but CTXS is a good one to keep an eye on next week. LAZ, I put this on Twitter today, saying that it's had, you know, it's been an underperformer. It has a nice longer-term stage 1 accumulation here, here, and if it can break, beyond this little band of resistance, maybe it can continue to move higher. It looks similar to me right now where we are as it was kind of over in this area just as it was starting to break out, in that we had the long correction, the accumulation, then a 20, 30, and 40-week moving average were rising. This is the type of stock you start to investigate for a potential investment opportunity if that's your time frame. Otherwise, from a daily time frame, I'm looking at this thinking that it's getting ready to get moving here. The average volume is 580,000 shares per day. That's a good one to keep an eye on. And each day when I see the proper actual swing trade setups, I bring them to subscribers' attention at market at Alpha Trends for different market opportunities. And one such thing is Lowe's Corp on the weekly time frame. It broke out about 4 weeks ago. It's held on to those gains, and now it's riding that rising 20-day moving average on a 30-minute time frame. It's back above the volume weighted average price from the recent peak, and looks to me like if it can clear this band of resistance, that's where the buyers will once again regain control. Then the question is, where would you set your stop? I would say just underneath this level. But we're looking to buy on strength, low risk, high probability trades. We're not looking to chase stocks that have already moved and present a higher risk of pullback. We're looking for new opportunities. Again, that's what I do every single day at alphatrends.net, is to bring low risk, high probability swing trades where I lay out the reason that we're buying a stock, the key levels, where the stops should go, and I do that from different time frame traders as well. For an investor, I'd say that your stop in Lowe's probably goes underneath this little pullback low, which would be found right here in the daily time frame. That's also would have protection from the rising 50-day moving average. For a swing trader, I would say your stop would go underneath here. It's always about not just an idea, but how to make the trade your own and understand the logic of it. So that'll do it. Hope you have a good weekend. Thanks for tuning in.